Let's bring in Anthony Mveyange. He is the Executive Director at the Partnership for African Social and Governance Research, and he joins us via Zoom from Nairobi. Anthony, Kenya's inflation rate came in at 8.5% in August, the highest so far, and well above the central bank's range of 2.5 to 7.5%. Now, the latest fuel price adjustment is expected to raise inflation further. What impact on other sectors of the economy should Kenyans expect?
Thank you so much for hosting me tonight. There are several impacts that the Kenyans should expect to see, particularly in some key sectors. Transportation is one of those sectors that is likely going to be affected, if not already affected. Manufacturing sector is also going to be affected because production costs are going to increase. Cost of transportation are going to increase. Raw materials that are expected to come from abroad because of high transportation costs are also going to affect manufacturing sector. We should also expect to see some changes and some impact on the agricultural sector as well, in terms of the cost of production, cost of fertilizers, and so on and so forth. By and large, the trickle-down effect of this is an increase in consumer price index. Inflationary pressure is likely to also increase in the country in the coming months to come.
Right, so the president's strategy seems to be bite the bullet and lead Kenyans to reprieve later. How will this work, especially if fuel prices keep going up internationally? Will Kenyans ever go back to prices under $1 a litre, or will the high prices be the new normal?
Well, that question is broad and it's contingent on many things, because Kenya is also connected with the global economy. So some of the shocks that we see in terms of higher cost of fuel and higher cost of living are not necessarily driven endogenously within the Kenyan economy. They are also driven by what is happening in the global market. So the way we see the global trends, we are seeing a little bit of downward trend on global crude oil. So the more things change in the global economy, the more likely they are going to also positively affect the Kenyan economy, because by and large, Kenya depends on things from outside that also tends to also have its own impact on the economy. So Kenyans to expect prices to fall to the normal, it's contingent on many things. I wouldn't say it is a yes or a no. It's also contingent on how the global economy will be cooling, what policies the current government will take, and what measures the regional governments within the African continent and East Africa would take, because Kenya is also trading with other partners. Kenya is also contingent depending on other partners within the region.
Now, we have seen governments across the world subsidize various aspects of the economies to cushion their citizens. I mean, it's a debate, it's debatable really, and some would argue that subsidies are not sustainable. But in your opinion, what is the place of subsidies, and how would you recommend that government like President Ruto's handle the issue in the face of a very thin purse?
So based on economic theory, subsidies tend to distort markets. That's number one. That's a classic understanding within the economic literature. Subsidies tend to distort markets. But in our countries, we can't avoid subsidies. Subsidies are important. But I think the move by the new government in Kenya is also looking into to be able to actually offer subsidies. You need to have a deep pockets. You need to have revenues, sources of revenues to be able to sustain that. And I think the recent stop in subsidies is also reflective of the inability of the Kenyan government to be able to take such costs. What we expect to see out of this is the Kenyan government and many other African countries, whether they have the ability to raise resources, raise revenues domestically to be able to offer subsidies. Given the nature of our economies, in some instances, government will need to intervene and regulate the economy so that the impact is not devastating, especially to small households and businesses. But that is also dependent on what are the revenue sources. Does the government have enough resources to be able to offer subsidies? In this case, Kenya is actually not able to, and we see the government move towards stopping subsidies, because if you offer more subsidies, it can also create a dent in other parts of the economy more broadly.